good evening, everyone. Thanks for calling in tonight, a Sunday evening, a beautiful Sunday evening here. This month, we are going to talk about February, what it brings to us, what the energy brings to us. So, this month is actually the month of returning to fundamentals in February 2024. The forecast will be that. So, I hope that um, I will explain more about this as we go along. As usual, we go through the introduction and then a disclaimer, brief recap of last month's forecast, and then the influence of five elements energy in February 2024, BC section on February 24th, geopolitical and financial, and also the summary. Okay, actually, we have I think not many people who are new to this platform. May I know? We saw Shasha. Ryan, have you joined us before? We have quite a number of crowds here, but I think there are like a few new one or two. Okay. Yeah, Sharon is our members. So disclaimer is this content that we are presenting tonight is based on our study on global trends in relation to the five elements in Chinese astrology that for us to use as a guideline in our investment decision. And as usual, we always want to exercise caution in investment. Do our research well on the company that you want to invest in, especially this year. The energy is very volatile. I will talk about it more. The research is even more important this year because the wealth energy is quite it's been pressured, it's been stressed for the year. So this is where we want to exercise caution. So I will talk more about that in our annual astrology and global trends talk. Okay. And we will not give any advice on stock because we are not financial advisor. So for those who are new, let me just introduce a bit about ourselves. We are actually the co-founders, co-creator of Astrology and Global Trends, both BC and I. And then we deploy two methods in Chinese astrology using the energy to do a forecast because in astrology part, actually we can forecast the trinity of heaven, man, and earth together with the element charts that we will know that roughly what are the trends for the year and for the month as well, which industries will be prosperous. And also PC will we will layer it with trend research from PC side where he's an expert in global trends, where we pair up these two and align to the planetary energy field of Chinese astrology and trend research to achieve a higher accuracy. In we have about actually 80% to help our members. We already started this astrology and global trends since 2022. Yeah, since 2022. Our first webinar was in June 2022. Okay, at that time. So it has been more than 1.5 years. So definitely there is some accuracy in it, and we will see some returning members as well. And we will recap. We will also recap on our last year's, as usual, we will recap on our last month's forecast on what is happening and what that correlates, whether it correlates or if it have some deviation from our forecast. As we say that our forecast is about 80% accurate. So that's why sometimes there will be a slight variations or deviations from our forecast here. So for the month of January 2022, I've already stated that in terms of the year pillar, we are still in 癸卯 year, and the month pillar is Yi Chou. Okay, so the wood energy is strong, that signifies growth and innovation. And at the same time, we also have biting through obstacles as the I Ching's pillar, the month pillar, as the I Ching saying, that we are biting through obstacles. Okay, so the earth will be weakened, where government will be weakening. There will be rules and regulation that's changing as we are looking at the global trends now. And also stated that the stock market, there will be a slowdown, okay, but except for the Magnificent Seven. So the truth will reveal itself, okay, in terms of this one. And what happened is that indeed there's escalation of tensions and conflicts resolutions. It does not really um become, that has elevated into like fiery war, but there are, tensions that is going on. For example, the South Korean opposition leader received surgery after a step. That means is not very stable. And in terms of the government also, that Israel also launched a drones to attack Hamas. That is what drones are for, so can be used as a weapon of the war also. Because last time the company I used to work in also has some drones technology. Okay, so there are deadly blasts also in Iran. Okay, and then there are acquisition flies. Okay, and then another one that is also the drones attacks in Ukraine. Okay, and then the biggest thing that happens was also instability in terms of northern earthquake. Actually, in February 2024, we'll go into the new year, the real official Jiachen year. And that's where there's a lot of clashing energy, earth clashing. And even before that, the energy really sets in, because the energy, as I state, sets in December 2023 with the Jia Ziman, because the Jia wood already comes in. So that's why we already started to see, like, pockets of earthquakes coming up from Japan as well. And also, this is also where, Taiwan politics is also another interesting thing to watch, where um, William Lai Ching is elected as a president, which is not really supporting China's policy. Okay, and and all these things, eventually it will not be now, but eventually it will, potentially become a sort of a time bomb, a conflict between Taiwan and also China. Okay, so, and also, I think the global economies in 2024, some people are says that they are facing the turbulent periods, which I will talk about that more in the annual astrology and global trends talk. That will be sometime next week. We will schedule in February 2nd. Okay. So let's go to the next agenda, which is the month February's 2024 energy chart. So month February 2024 will start on 4th of February. And this is actually the month that we will also step into the new year. Okay. The official Jiachen year. Okay. So here, and the month is Bing Yin. Okay. So the wood energy is always strong. If you notice that every time the beginning of a Li Chun always starts with the tiger month where the wood is strong. That's why education and growth is a very important aspect from all human, because wood is an element that is grow and represents growth and also innovation. So this is why we have to continue our own development, our development and self-growth in all the aspects, either in our knowledge or in spiritual wise, in terms of this spring, because spring is the beginning. Okay, so for the year. So every year, somehow or other, the wood energy will always be there one. Okay. So this is, and what we can see that from here, the government is actually trying to control the assets of the people on the surface, because you can see that the ping here is controlling this our pillar, which is a keng, because fire controls metal. If you know the five elements energy cycle of production, controlling, and clashing. Okay. And this could signify a major change in leadership in the major nations. We already see that it already starts in the January itself. And also potentially the stock market will probably slow down. Maybe it will slow down around March, but not so much in February. Okay. And then there is also potential opportunities in precious metal because of the pulling in of tin with the ping itself. There's a combo there. Okay, so this is what I see from the energy chart, the five elements. And let's go through the hexagram for the month. The hexagram for the month is also for ping yin, is family. Okay, so family, it means that we have to return to our family, the fundamentals, or return to the roots. But in terms of global economies, that means the fundamentals is very important. So it has an emphasis on effective leadership for both government and corporate, which is very important now. And at the same time, we have to adapt to the wind of change to period 9, because in February, we will officially be in period 9. But actually, we already started the period 9 since December 2020, as what one of my masters saying during the Great Conjunction, the energy has already comes in. Okay, so we will need and then diplomacy is needed to sort of resolve those conflicts that happens. That's why the emphasis on leadership is very important. But if you look at the world today, how many capable leaders that we have? You go and ask yourself. Okay, so this is something that we really needs to look into. The leadership and all this is actually the man part in the trinity of the Chinese astrology. Okay, so and countries also are turning inwards to protect resources. They start,
Evelyn,
yes.
I just want to interject a bit. Now, just
Mm,
now, you talk about leadership, yeah.
mm,
Some of you, if you have followed some other alternate sources, you might have known that a lot of the current batch of leadership in Europe, including the recently elected Argentina president, have all come from a single source. They were selected young leaders of the World Economic Forum. Okay, just to let you know. And this is where the World Economic Forum extend its policies across nations, because a lot of the leaders like previously the Finland's prime minister, the Italian prime minister, even the recent Argentina's president, and a number of those in Europe were also young leaders that were selected by the World Economic Forum.
okay, okay. I think they were more interested in the policy making rather than for the people. Because I
Yeah,
heard that there's a
yeah,
lot of chaos going on in the Western nation, especially in Europe.
yeah, yeah.
Yeah, okay. So in terms of family, and actually you look at family itself, it's also quite interesting hexagram. It's actually the winner over the fire. That means the wind will blow the fire. That's where we are also into period 9, because this is also a Li Gua. Okay, this is a Xun Gua in the trigram. So the wind of change. That's why we say that adapt to the wind of change to period 9, the Li Gua here already. Okay, so and also countries are actually turning inwards to protect resources, and they know that resources eventually is going to be very important. And also we have community driven, so because it's a family we have a lot of community driven initiatives and grassroots movements globally, and it will even escalate even more during during the period 9 itself. Okay, because fire they spread from one to another. Okay. Yeah. Okay, so over to you, BC, for your part on the global trends research to see whether it correlates to what I have talked about in just now, related to the hexagram of the month and also the energy of the month, the pulse chart of the month.
Yep. And there's a lot of correlation, yeah.
Mm,
Just go back to a bit of January. Now, a number of things that we predicted in January did not turn out the way we believe it would. For example, we expect the Fed to be dovish, but it seems the Fed has hardened its stance instead, and maybe perhaps it's alarmed by the persistent rise in the stock market. And this is maybe because the Fed could be worried of another bubble in the making. Um, then, due to the Fed's return to hawkishness, the US dollar rose and gold fell versus our expectations of a fall in the US dollar, and gold continued to rally. But I think, on the other hand, the relationship between gold and the US dollar is no longer based on economic fundamentals, but it's rather based on a financial war uh, between the multipolar world and the unipolar world, which wants to maintain the hegemony of the US dollar. So that is why you see that there's a lot of selling whenever gold reach a certain level, and the bullion banks would then start to sell down the market through their paper gold. But on the other hand, on the eastern side, you see as gold is being sold, they are buying up the physical gold. Okay, and later I'll share a very interesting remark from a CEO who is in the gold business in China, and the amount of gold that China has bought will actually be very surprising. So we expect the ECB to mirror the Fed, but the ECB remains tight-lipped without any suggestion of a rate cut in the horizon. And we expect that China would reduce its treasury holdings, but then in November, the Chinese PBOC actually increased it by about 12 billion. So these are things that we expected, but did not occur due to sudden change of policy and also financial warfare, and the Fed sudden turn from dovishness to hawkishness. So where we got right. Now the Magnificent Seven continue to lead the market. So you can see in January, it actually spiked quite substantially. Okay, here in the 50+% right now, it has gone almost to inching towards 70% just in the month of January alone. But then if you look at it, since the bottom, okay, in October, the 493 S&P stocks have just barely went up to mid 20%. But then the Magnificent Seven has gone up by more than 60%. So that is the kind of disconnect, okay, between the 493 stocks that consist of the biggest automakers, okay, around the world. But Tesla alone, can beat all the entire auto sector, the other top automakers in terms of market cap. So it has become very speculative, okay, and because of the rise, a lot of hedge funds or ETFs have moved in, okay, to the Magnificent Seven, okay, either in the Nasdaq, S&P ETF, or even the semi-con ETF. And the ratio of the S&P to emerging markets indices have actually fallen to about 30 years low. Okay, so that's a huge gap. It's like everyone suddenly just want to chase uh, those
They want to
technology stocks.
chase. Yeah, they want to
Yes,
chase.
yes. So it
Um,
has become pretty speculative at this juncture. Yeah,
mm.
Evelyn, you want to add?
Yeah, I would like to caution that this Magnificent Seven is not a representation of the whole US economy. A lot of people, got it wrong, tell me that, oh, US economy is very strong because of this Magnificent Seven. I do not think so, because we still have the remaining of 493 companies. This is just a sample that does
Yeah.
not represent the population. We have to look at the whole population. That means the whole company, the whole business, the whole economy itself.
Yeah, so that is one of the key thing, and that's why there's no funds that are interested in emerging markets. Even though that that uh that normally invest in emerging market, they actually scale down their investment in emerging market and move over to the US market. So that is how it has become very disconnect. Like Germany. Germany's, is in almost in a recession. Its industrial base is being destroyed, but the German DAX is near multi-year highs. Okay, so there's a huge disconnect. Like people are chasing a certain so-called chasing the unicorn, okay? But the fundamentals are actually cracking and collapsing. So eventually there'll be more noticeable cracks in the financial system because the banks in the US uh, is faced with 680 billion dollars of unrealized losses. And the Bank Term Funding Program, which was implemented in March 2022 in view of the collapse of four banks in the US, the fund was supposed to support the banks. And right now it has reached a new record high of 167.8 billion. Okay. And also because even the banks themselves borrow this money for speculative purposes. So what happened was, because when they borrow from the Fed, the interest rate was, I think was 4. And then they use that money to move into the reserves, which the Fed pays them 5%. So that is why, they make the arbitrage of 1%. So they continue to borrow a lot of money. And that, I think, was the reason why the Fed announced the end of the program will reach its expiry as scheduled on March 11. Now, right now, the market may be very speculative, but as the Fed emphasis that they are not going to change their stance, they will actually stop the program on March 11. Then I think closer to the end of February, there will be some who wants to get out of the market first, because if without support from the Fed and sitting at 680 billion of unrealized losses, with the Fed not showing any intention to start cutting interest rate, that means that the unrealized losses in the bonds will remain. Unless the Fed cut interest rate and then the bond value increase so that the unrealized losses can be narrowed. But since it's not happening, then they will continue to sit in this time bomb, which will continue to increase because the destruction of the commercial real estate. A lot of banks, they hold commercial real estate loans, and the these office buildings are being sold. Previously, a few months ago, when we talk about the CRE market, they were selling at 30% discount. Right now, they are being sold at 60% discount of the commercial value of its initial purchase. So the destruction of the commercial loans also will create undue stress to the banks, which they hold as assets. So that means the unrealized losses will continue to go up as the CRE market continue to see sale of assets at huge discounts. So that is why I think closer towards March, there may be some people who wants to get out of the market first while await the Fed decision after March, on March 11, and the subsequent consequences of what will it lead to. Now, the other thing is that we talk about credit availability would actually shrink. Okay, and right now credit availability has turned downwards. Okay, and this will continue due to a high interest rates environment and banks tighten lending conditions. And commercial real and land development, commercial real estate and land development will greatly be affected. And the US economic indicators continue to weaken as the conference board leading economic indicators came in at negative 6.9% year on year in December, the biggest decline since the Lehman crisis. And in the euro area, the PMI for manufacturing and services continue to remain in contraction, okay, below 50 respectively, in reaffirming our belief that the euro area is mired in an economic malaise. So we were also right in forecasting that euro area inflation will rise. Recently, the CPI for euro area actually increased. And farmers' protests in Germany, France, and Spain stole the headlines in January. So because Europe, because of their overzealousness in the ESG, they are actually culling, okay, the livestock and restricting farmers to use fertilizers as well as pesticides. So that's why the farmers are rebelling. Okay, they are piling the entrance of the government buildings with sheep or cow manure. Okay, and they are also obstructing the highway with all their tractors. So that is why, you know, the protest has made it such that the euro economy will continue to suffer, because when people are protesting, they are not being productive workers. And this kind of protest will actually result in government exerting even more control. So eventually there'll be a head-to-head retaliation between both parties. So we mentioned that the EU will turn protectionist against China, and this is what happened. The EU right now is looking at ways how to reduce its trade deficit with China, which have ballooned to 400 billion in 2023. Now, of course, the answer is very simple. Okay, what Europe has in terms of automobiles, in terms of other machinery, you know, even the Airbus, China right now are producing. Okay, China is the world's largest auto producer. China right now have the C919 commercial airliner, which actually Airbus has a small percentage of share. So, and Airbus, you know, their Airbus have moved over to China to have you know, to actually do assembly work in
Yeah,
China,
that's right.
you know.
They
So
they have a plant in China. I've forgotten which city, near
yes,
Shanghai.
yes. So you know, China won't be buying from Europe, but instead Europe is investing in China. And what China needs from Europe is actually high-end chips and also the EUV machine. But Europe is not selling this to China.
Mm.
Okay, and therefore you have this trade deficit. And then they say that China is is uh, taking advantage. But the thing is, you know, you can, you know, any country, if let's say they self-improve and they import less from you, doesn't mean that taking advantage of of view, they are actually improving themselves. So because of the colonial mentality, they always feel, countries from the West always feel that they must have a say, okay, in the economic matters of other countries. So that's why Europe will continue to deteriorate, because they are not making the right trade decisions, and it's all driven by sanctions. Like Russia is the cheapest source of energy, and then Europe is importing LNG from elsewhere, from US, which is even more expensive. Okay. Russia is directly piped gas from Russia. But if you want to import LNG, first you have to gasify the natural gas. Then you need to ship it over long distances in an LNG ship. And when it reached the port of call, you have to degasify it to return it back into natural gas to be used by the average household. So the gasification and degasification and the long journey via LNG shipping is very, very expensive. Okay. So if let's say they have cheap energy, they can produce cheap auto, which they can then sell to China. But right now, even the auto production in Germany has become so expensive that they actually shifted their operation into China. So that is why they inevitably lost their industrial base. And we predicted that China's economy will remain strong, and China's GDP grew 5.2% in 2023. Prior to that, we have monthly data showing that electricity consumption in China remains strong, that is in line with the growth projection. So that is how we actually managed to predict, okay, China's economy. So we also predicted that China's PMI for manufacturing will continue to hover between expansion and contraction. And this is the chart showing the Caixin manufacturing PMI. There's a lot of up and downs because Europe is actually used to be a major importer of Chinese goods. But right now, because of its economic situation, Europe consumption actually have dropped. And because of that, there are lesser manufacturing from China to Europe. And of course, these are not the high tech, okay, but the normal goods that are like household goods, toys, these kind of things that consume less, okay, in US, North America, and Europe, and therefore it affects China's PMI. Now, China achieved a trade surplus of 823 billion in 2023, slightly less than 2022, but this is due to the overall strength in the US dollar. And this is after conversion, because a great portion of China's trade right now is conducted in renminbi. So it's like, recently there's a lot of economies that put out, China's gap between US economy has actually fallen. Okay, at one time they are very close to the US. Right now it has fallen, and therefore China is collapsing. It is because of the strong US dollar. Okay, and China is trading a lot in renminbi with a lot of trade partners. If you value it in US dollar, of course, the US dollar is like the king right now among all currencies. However you look at it, everyone will fare badly against measurement in US dollar. So if you really want to look at GDP, the best measurement is still purchasing power parity. Okay, because for example, someone just showed, okay, a high-speed rail in China over a certain distance costs 28 US dollar. But over the same distance in the US, in a train that is only half of China's high-speed railway speed, is 165 US dollar. So that is why there's a huge disparity between China's and US GDP. And a writer like Jim Ricketts like to mention GDP per capita. If you want to say GDP per capita, US savings actually has fallen to multi-years low. And the China's savings is at 18 trillion US dollar. So that goes to show that the people are actually earning to beat inflation and they are saving their money. But the US, their earning is not enough to beat the inflation and they are digging into their savings to consume. So that is why sometimes it's very subjective. And when you want to measure economies between countries, you need to have a much clearer mind in knowing the fundamentals. So let's look at the US economic indicators. GDP grew 2.5% in 2023. And interestingly, people say, wow, the US grew by 2.5%, US good. China grew by 5.2%, China back. Okay. So that is how the Western media sells it out, okay, to the masses. So CPI was 0.3% month-on-month in December. Year-on-year, it grew 3.4%, up from 3.1% in November. Even US right now has seen inflation inching up. Okay, and if anyone bother to read about Paul Krugman, who is a Nobel Prize winner for economics, just forget about it. He says that US inflation has already been beaten. Okay, so he is a pro-establishment, always try to say good things. Okay, but everyone is challenging him. Okay, you no need to be a Nobel Prize winner to sometimes challenge certain economy thoughts. Okay, so core
Maybe
CPI was
he wins
yeah.
the Nobel Prize through lobbying, through the support of the government.
Yeah, maybe.
Mm.
You know, and Ben Bernanke, who started the helicopter money, MMT, modern monetary theory, printing lots of money, also received a Nobel Prize. Uh, so that is how skewed, okay, it is. So core CPI was increased 0.3% month-on-month in December. Year-on-year, it grew 3.9%, down from 4% in November. Because the core is down from 4, everyone is celebrating. Okay. And that's why then the Magnificent Seven go up even higher because that means that the Fed is not going to hike. PPI was negative 0.1% month-on-month in December. Year-on-year, it gained 1%, up from 0.9% in November. Now, retail sales came in at 0.6% in December. Year-on-year, it gained 5.6%. Net retail sales less CPI is 2.2%. So if you look at it, that the US GDP is based on real GDP, which means they have take into consideration the price deflator caused by inflation. So if you look at it, net retail sales less CPI is also 2.2%. So this gives you a certain near gauge because 70% of the US economy is based on consumption. Yeah. So industrial production rose 1% month-on-month in December. Year-on-year, it rose 1%. NAHB index came in at 44 in December, up from 37 in November, but still in contraction. Now, NAHB index is the housing index, National Association of Home Builders. So housing starts, not rose, yeah, fell. Month-on-month in December, while housing permits rose 1.9% month-on-month. Existing home sales fell 1% month-on-month in December. Year-on-year, it fell 6.2%. Now, part of the reason is that a lot of the population actually bought their homes using a fixed mortgage when it was around 3 to 6%. Right now, at 7%, people do not want to sell their home. So existing home sales actually fell. And because of that, there's demand for new home. And therefore, new home sales rose 8% month-on-month in December, and year-on-year, it rose 4.4%. Now, part of the rise in new home sales was also driven because the builders are building smaller homes, okay? And this is called shrinkflation, okay? They build smaller homes to cater for a lower price entry level so that it is less strenuous on people who wants to own a home due to the high mortgage rate. So even housing, you see shrinkflation. And a lot of things is that governments like to talk about inflation and all those, being controlled. But for those of us who buy stuff from the supermarket, I'm sure you already notice it. Okay. Like previously, if you buy a packet of biscuits, it is really filled, row upon row of uh, of of biscuits in that one row. But right now, they are packet in a wrapper consists of 3 pieces. Then they throw all those in, jumble it out. So there's a lot of empty air in between. Okay. But the price is still the same. And if you buy Pringles, last time when you open the cover, you see the first layer. Now you open the cover, you have to look inside, then your fingers have to go in about 20 or 25% deep. Only you can extract the first piece. Okay, so that's shrinkflation, which is another form of inflation, but it's never counted. So that's why sometimes when it comes to um, inflation, it's the Hokkien saying, kaki kong, kaki song, where where people want to say inflation is under control. Okay, so PMI for manufacturing saw back to expansion at 50.3, while services remain in expansion at 52.3. Now, part of the expansion in the manufacturing sector was because the Biden admin poured a lot of money into the building up the semiconductor capacity. And they spent 100 over billion, okay, to subsidize the construction of these fabs to manufacture semiconductor and chips. So that costs a lot of when you put money into building up an industrial base. Of course, the manufacturing will actually naturally expand because of consumption of materials and such. So US economic indicators, the Conference Board leading economic indicator continue its decline, dropping 0.1% month on month. So it has declined for 20 months consecutively, the longest streak of decline since Lemon, 22 months of decline out of 23. Year on year, it fell 6.9%. So as you can see, this was during the Lemon crisis here. There may be a certain up and then suddenly it goes down. So right now it is like going up again, but will it go down? And that is something that we need to monitor, because the leading economic indicators is like foretelling what could happen in the next few months. So US budget deficit. US fiscal year 2022-2023 ended with a budget deficit of just over 2 trillion. While in Q1 2023-24, the budget deficit reached a staggering 509 billion. So already in the first quarter, it's like telling you it's on track to achieve a deficit of 2 trillion. So where did the 2 trillion gone? The 2 trillion has gone into the economy through government spending. And if let's say you have the time, you just correlate government debt with the S&P, and you can see the close correlation that is due to government spending that propel, okay, the stock market higher. So this is in the month of December. The US government collected a total of 429 billion to various taxes, while total outlays hit 559 billion. That's a deficit of 130 billion in just a month. The December budget deficit was more than 40 billion, higher than the 87.5 billion median estimate, and more than 50% higher compared to US $85 billion in December 2022. Meanwhile, US debt has reached 34.606 trillion as of 25th of January 2024, or 122.3% of its GDP. And US interest payment on debt has now reached 1.026 trillion. Okay, and in this year alone, the US government need to refinance about 8 trillion of maturing debt. So that is why the debt will continue to go up. And another worrying trend, percentage change in real expenditure has risen, whereas the percentage change in real receipts has fallen. That means that expenditure is being financed through debt. In 2023, the US nominal GDP grew by 1.5 trillion or 5.8%. Now this nominal, which means it's not real GDP. During the same period, US government debt grew by 2.58 trillion or 8.2%. So that growth has actually outpaced GDP growth. So the entire economy of the US is driven by debt, okay? Just like any other country, okay? But the thing is, like China's debt to GDP actually have also grown. But the difference is that US debt, okay, has grown in terms of percentage over GDP, but it also faces a trade deficit. Okay, US trade deficit has continued to be huge. And whereas China continues to have a trade surplus, not trade deficit. So therefore, there's a huge difference between the two. Now, Evelyn talked about control, about government wanting to exert control. So something very interesting happened with the Bitcoin ETF. Now, prior to running it, prior to the listing of the Bitcoin ETFs, a lot of the hedge funds that are or investment companies that are applying for this ETF, they keep on hyping the ETF and all those how hyping about how Bitcoin will be a major game changer, and that is digital gold. They try to upsell the concept of Bitcoin. So, but all the while they have been accumulating. Okay, when that ETF is listed, okay, so what we see is that the initial breakout, okay, was followed by a 15% retracement. But the difference is that settlement is all in cash. There's no transfer of BTC or Bitcoins to investors' wallets. So that means that if you buy the ETF, you will not get any Bitcoin. Okay. And the ETF should not be seen as supportive of Bitcoin price, but as a means to control the price. Because if all these funds, because the ETFs here are not just based on spot, okay, but a lot of ETFs, they come in derivatives as well. You have the options, okay, the call and put options. So what is being done is that people can use an avalanche of puts, okay, to cast a negative sentiment and cause the price to fall. Now, this is exactly what is happening with the GLD and SLV ETFs. The GLD is the gold ETF, while the SLV is the silver ETF. So if you are investing in gold or silver, please don't buy these two ETFs. These two ETFs have options, which means they are used to suppress the price of gold. Okay. And if you go to the prospectus of this ETF, they did not guarantee that every dollar that is in the ETF will be backed by the same weightage in terms of gold or silver. Okay, so that's why sometimes if you really want to have, if you believe in Bitcoin, then I think you might as well own the Bitcoin in your wallet rather than let corporations, to control it. So that's why I think this will be used to, for speculation. Okay, if you are a trader, you want to speculate and you watch the technicals and all those, well, maybe you can speculate. But if you are a firm believer that Bitcoin is destined for something great sometime in the future, because of the implosion of the financial system due to too much debt or whatever, okay, then make sure you own it in your wallet, okay, and not buy it through the ETFs. So ETFs are sometimes used to um, used to manipulate certain assets that are deemed to be uh, not following the government's agenda. Okay, like gold is and silver is considered real money, but it is used through ETFs, okay, to suppress its price. So then, of course, a lot of people are also awakening up. Okay, and here US states made bold move to reclassify gold and silver as real money. Okay, there's a lot of states right now, they see that, the US debt has become unsustainable. The states themselves want to protect their own finances, the people's finances. So they say that, okay, buy gold and silver. Okay, we make it as real money. You will not get taxed if you buy this because it's not an investment. Okay, some states still charge as a capital gain tax, if you buy when there's appreciation in the price of gold or silver. Okay, but here they say some states are saying, nope, we want to take control. Okay, it is like going back to the fundamental. Gold and silver are real money. Okay, it has been for the last 5,000 years. Okay, so that's another way of saying that, okay, some local governments wants to return to fundamentals. And here, uh, recently in the members area, I posted that there's some friction between the Biden admin and Texas. Okay, and there is now a growing trend among US states to exert themselves, even though their actions may contravene with the Biden administration. Texas, for example, is defying Biden's demand to abandon building the border wall. Okay, increasingly more states are legislating gold and silver as money. Okay, which contravene with the Fed's own fiat currency system. So these are somewhat like, why is Texas so adamant in building the border wall? Because they are nearest to Mexico, and the immigration caravan from South America keeps on going through the wall, going through the border. So in a way, you can say that Texas is returning back to their fundamentals, okay, securing their own state security. And you can also say that US families are returning to the fundamentals of family, where in this regard, okay, Texas have the backing of another 25 governors, Republican governors. And on top of that, I think there were reports that up to 1 million of the people from outside of Texas and within Texas are moving to the border to help secure the border. So again, fundamentals may not just relate to economy, but on family, safety, and security. So this is the statement that the Texas governor mentioned, okay? And this is very strong statement because it is a constitutional right to self-defense, which means they are prepared to fight against the Biden admin. If, yeah,
Yeah, because actually Texas is also a very important state in US. It's the biggest state. I think it's one of the biggest state in US, Texas.
yeah, it's also one of the very populated one, okay?
I
And the other thing is that how Biden retaliate, okay? Biden stopped issuing the license for Texas port to export LNG. So, it's like this tit for tat, okay? Which, I think it will cause even more uprising within the US itself, not a civil war, but then there'll be a lot of civil disobedience, which means people are disenfranchised with the government. And this could only lead to more breakage in the social safety net in the country.
we
So
same
what question?
got people's
Yeah,
movement right just now in the hexagram. So I think this is one of
uh,
them representing this.
Yeah. So what could happen in February? While Magnificent Seven could continue their indomitable run in early in the month, the later half could see some anxiety as 11 March deadline looms, when the Fed could cut off the BTFP loans to the bank. Now, many banks are still mired in massive unrealized losses, and without the Fed's crutch, they could face distress. So I believe the banks would plead for the Fed or US Treasury to intervene. Now, FT reported on 20th January 2024 that 8 pension funds are borrowing money to help rebalance their portfolios amid the illiquid investment in private equity, infrastructure, and real estate. So a lot of their REITs got burned because the office real estate market collapsed. So pension funds could be the next shoe, not show. Will be the next shoe to drop in the coming months if interest rates stay high. Okay. So it's like, because some pension funds also some pension funds also invest a lot in the bonds because they follow the 60-40 formula, okay, in terms of investment. And right now the 40% is in deep underwater because the value of the bonds have collapsed. So then they are in trouble as well. So US debt binge will continue in February as spending exceeds receipts. US government interest payment on debt will shock the public. So inflation will stay persistently above the Fed's target of 2% as freight costs and oil price see a resurgence. So like yesterday, there was a Houthi attack on a British tanker, and immediately, that night itself, crude oil went up by more than $1. So US economy indicators will likely remain weak. Okay, more states will exert their individual authority, causing friction with the federal government. Partisanship in Congress will further strain the parties, and this will increase as US presidential election draws near. Internal strife could be a possibility if the border crisis deepens. So these are the kind of things that to look out for in February. So if we look at Europe, German manufacturing PMI came in at 45.4 in January versus 43.3 in December, while services PMI came in at 47.6 versus 49.3 a month ago. So still in contraction. France also in contraction. UK manufacturing in contraction, but services at 53.8, which is an expansion. So the contraction in manufacturing sector shows that the industrialization of Europe is still an ongoing issue. Mercedes is reported to open to sale of group-owned dealerships in Germany. More German car makers are moving to China as the EU environment becomes uncompetitive due to rising costs of energy. So recently, Qatar decided to postpone the shipment of gas, LNG gas to Europe because they cannot use the Red Sea. So, and right now, Biden says, no LNG export license, okay, from Texas. So that means that Europe will face another energy crisis because they rely on LNG since they have cut off from Russian gas. Now, of course, if there's no LNG and Europe has not have enough nuclear power, then the only thing that is most viable and is cheap enough is actually coal. Okay, so members who actually follow my writing about coal, okay, do take note. Yeah. So on top of that, France is one of the largest nuclear power producer in Europe. And right now, their source of cheap uranium from Niger, okay, is being cut off because the Niger coup, they have actually cut off the France access. But right now, they are negotiating, and some of the companies that operate in Niger will be able to still produce uranium, but I believe that it will be renegotiated because previously the rate is just too low and at France's own benefit. So Euro area manufacturing PMI has been in a state of decline for more than a year. This will continue indefinitely until the continent has a cheap energy source. So this is the Euro area manufacturing PMI. And this is the inflation. Notice that it almost near this, but then it has to go up. So another energy crisis will likely push it much higher. So, of course, the Middle East crisis will ensure that inflation in the euro area will remain elevated. So if you look at it, the Europe economic indicators, yeah, CPI came in at 2.9% year-on-year in December, up from 2.4% in November. UK CPI came in at 4% year-on-year in December, up from 3.9% in November. So if you look at retail sales, you can see that Europe consumption has actually fallen most of the time to negative. Whereas in UK, because they have expansion in services, you can see that it's sometimes it's some ups and some down, but this recent down is rather steep. So what could happen in Europe in February? PMI seemed to suggest that Europe could face another month of challenging economic conditions as inflation will remain persistent as the crisis in Middle East deepens. Now, I have some news, but it's unverified yet because right now there's on the Twitter sphere, there is a lot of talks about Israel amassing an army and hardware military equipment along the border with Lebanon, suggesting that an invasion could be imminent, but it's not verified as yet, so let's see. So ECB still remains tight-lipped on interest rate cuts, and this could underwhelm business confidence amid deterioration in key indicators. In fact, the German Business Confidence Index actually continued to fall. Widespread farmers' demonstration reported across Europe. This will affect the economy further. Europe is turning protectionist in its trade with China. NATO is also expanding to the east. Such antagonism towards China will damage trade and cause inflation in Europe to escalate higher. Expect China to launch its own countermeasures. So economic indicators, China CPI was down negative 0.3% year-on-year in December and up from negative 0.5% in November. So core CPI came in at 0.6% year-on-year in December, unchanged from November. PPI came in at negative 2.7% year-on-year in December and up from negative 3% in November. So all this negative PPI and CPI has everyone talking about China is in a deflation. Now, deflation can only occur when there's destruction in demand, consumer demand. Okay, but right now, China retail sales came in at 7.2% year-on-year in December, down from 10.1% in November. So even though retail sales is up, but you can see that the Chinese are more cautious in their spending, okay? But spending on smartphone, electric cars, because there are incentive for electric cars, then, remains very buoyant. But I think in certain things like apparel and such, they may be more cautious in it. But based on the kind of tourism that has been expanded in Xinjiang and in Harbin, you can see that when it comes to food, travel, the Chinese will actually splurge. So I don't think that it is a signal of continual fall in demand, but there'll be some ups and downs. Okay, but overall, it will still be positive. Industrial output went up 4.6% year-on-year in December. Down from 6.6% in November. China fixed asset investment went up 3% year-on-year in 2023, up from 2.9% in the period from January to November 2023. China's survey urban unemployment rate stood at 5.2% in December, up from 5% in November. Now, there has been recent talk, people criticize China, that China suddenly take its youth unemployment report out, from its statistics. But sometimes it's all putting the cart before the horse, because just this month China put back the youth unemployment, but then they actually separate it out, because previously they just took a lump sum of youth unemployment, but then they actually take out the portion of youth that are still studying. So that's why the unemployment among youth actually fell uh, from 20% to just more than 10%. It's like the other half are still pursuing their studies. So per capita disposable income was 39,000 renminbi in 2023, up 6.3% year on year in nominal terms. After deducting price factor, per capita disposable income rose 6.1% from 2022. So this increase in disposable income allowed China to continue to continue having savings. Okay, whereas in the US, the inflation throughout 2021 and 2022 has actually destroyed a lot of their savings, because the income that is the wages that is net inflation is actually negative. So that's the primary difference. Yeah. The Caixin's PMI for manufacturing sector came in at 50.8 in December, while PMI for non-manufacturing sector came in at 52.9. So China total imports and export of goods in 2023 expanded by 0.2% year on year to 41 trillion. Export grew 0.6% to 23.77 trillion, while imports edged down 0.3% from a year earlier to 17.99 trillion. Again, people like to say that China economy is collapsing because imports are down. Now, China right now is pursuing a policy called self-sustainability, being self-sustainable. So that's why inevitably a lot of the whatever China can manufacture on its own, it will manufacture on its own, rather than having outflow of money externally. Okay, so this is part of China's policy on keeping internal circulation. Okay, the dual circulation policy of export but internal circulation of its economy as well. So that's why as China gains more self-sustainability, the import will gradually reduce. So effectively, this means that China has achieved a total trade surplus of 5.7 trillion or US 814 billion. China's electricity consumption rose 6.7% year on year in 2023. So total power usage reached 9.22 trillion kilowatt hours. So primary industry increased by 11.5%. Secondary industry and tertiary industry rose by 6.5% and 12.12% respectively. So it's across broad sectors. Maybe in the secondary industry, it increased less slightly because this could be the manufacturing sector that does a lot of export to Europe or to US, which actually saw the manufacturing being reduced somewhat, but still consumption is there, suggesting that the manufacturing could be catering more for local consumption. So residential saw mild increase of 0.9% to 1.5 trillion kilowatt hours. Now, major Chinese cities reported falling home prices in December compared to the previous month. And for first-tier cities, Beijing, Shanghai, Guangzhou, and Shenzhen, prices of new homes edged down 0.4% in December, while that of resale homes dropped 1.1%. So 31 second-tier cities and 35-tier cities in general also went down in prices from a month earlier. So real estate in China will remain weak, but the government continues to tweak its policies. So China auto exports surged 57.9% year-on-year to record high of 491 million vehicles in 2023. It marks another significant increase after the country exported more than 3 million in 2022 and 2 million in 2021. Total auto sales surged 12% year-on-year to top 30 million units in 2023, while output exceeded 30.16 million units, up 11.6% compared to 2022. So China's heavy industry continued to outshine, and China maintained its top position in global shipping market in 2023. So shipbuilding output climbed 11.8%, 42.3 DWT or dry weight ton, accounting for 50.2% of world's total. So China right now have the bulk of the shipping orders. New orders surged 56.4% to 71.2 million DWT, taking up 66.6% of world's total. Holding orders total 139 million DWT, expanding 32% year-on-year, represents 55% of global market share. So, and I believe that once China commercial airliner starts to build out, okay, which means more Chinese airlines are using the C919, then we will see that China could be the commercial airline business could see China making a huge print in the global aviation business. Then, of course, the data is not out, but China in 2023 accounted for more than 50% of total solar and wind farms built out. Now, debunking the FDI falling narrative. So a lot of people like to use the fall in the FDI in dollars between 2023 and 2022 to say that foreign companies are not interested in China, they are withdrawing from China. But I'm going to share with you some data. Number of newly established foreign invested enterprises reached 53,766 in 2023, representing a year-on-year growth of 39.7%. So numbers of companies that are investing in China actually increased rather substantially. Now, the actual foreign direct investment, okay, hit more than 1.13 trillion, but it's down 8% year-on-year. So they use this measurement of down 8% as showing that, you know, foreigners are exiting China. But in terms of foreign companies that are investing in China, actually increased 39.7%. So in terms of sectors, FDI to the manufacturing industry reached 317 billion in 2023, down 1.8%. High-tech manufacturing registered 6.5% increase in FDI. Its share of total FDI also expanded by 1.2 percentage points compared to the level in 2022. FDI originating from France, Britain, Netherlands, Switzerland, and Australia increased by 84.1%, 81%, 31%, 21%, and 17% respectively. So this is already showing that a lot of firms are very interested, especially in the high-tech manufacturing area. Now, one of the primary reasons for the fall of FDI flow into China could be due to high interest rate environment, because companies, they want to invest, but they cannot, their access to funds to expand overseas is rather limited because of the high interest rate environment. But high-tech industries seem to be the focal point of foreign investment, suggesting that China is strategically moving up the value chain. China today remains as the world's top manufacturing hub for 14 consecutive years. So sometimes you need to, you know, when certain news is driven by certain agenda, okay, then you need to find out whether it's true or not, and then you read other sources of news. Yeah. So I'm going to share with you some policies, recent announcement, because I think it could change the dynamic in the Chinese stock market and economy. Now, Chinese authorities have announced a plan to establish a financing coordination mechanism for the real estate sector. And China will improve implementation of its tax and fee reduction and fee reduction policies further to support scientific and technological innovation. China has stepped up the design of its new energy vehicle industry to facilitate the sector's high-quality development and consolidate its strong growth momentum. So these are where the policy supports are coming to. And EV, okay, scientific and technology, that means a high-tech manufacturing, okay, and research. So China top economic planner, the National Development and Reform Commission, pledged an array of measures in 2024 and beyond to spur high-quality development. Among it, China will develop new consumption growth points such as smart homes, sports events, domestic products, and China chic goods. Efforts will go into boosting spending on big ticket items and improving the consumption environment. So again, the clue here is big ticket items. Yeah. In expanding effective investment, more support will go towards core technologies in key fields, new infrastructure, energy conservation, and decarbonization. Now, President Xi recently come out with a financial blueprint, okay, that is shared among the party members. Now, these are the few key policies that will help China in opening up the financial market. So the first thing is 6 key elements of a financial powerhouse: strong currency, strong central bank, strong financial institutions, strong international financial centers, strong financial regulation, and strong financial talent pool. So obviously, okay, there is, I believe soon, a move towards a strong currency. Right now, China versus the US dollar, there is quite a huge gap. So a strong currency doesn't mean that China would want to revalue its currency much higher, but a strong currency in a sense that it is very steady and not subject to high volatility, okay? Which means people can have confidence in the currency. And of course, you know, one of the measure is, of course, backing the currency with gold. Okay, then of course your currency will be very strong. Whether it is going to be that, we do not know. Okay, but I will lead you to some clues afterwards. Building a modern financial system with Chinese characteristics. Propose establishing 6 major systems. Scientific and robust financial control system. So that means that it will have more integration of biometrics with payment systems, etc. Structurally sound financial market system, collaborative financial institution system, comprehensive and effective financial regulatory system, diversified and professional financial products and services system. That means that they will look at new financial products to spur allocation of resources or funds into the market. Autonomous, controllable, safe, and efficient financial infrastructure system. Reiterating the 8 adherences, continuation from the Central Financial Work Conference held at the end of October last year, emphasizing the path of financial development with Chinese characteristics. First proposal of financial culture with Chinese characteristics: honesty and trustworthiness, not crossing the bottom line, seeking profits righteously, not slowly driven by profit, prudent and cautious, not seeking quick success and instant benefits, upholding integrity and innovation, not deviating from reality to illusion, complying with laws, regulations, and not recklessly. So I think China wants to build a financial system that can be trusted, okay, because it has its own strict policy to adhere to. So this could mean that China is building up the infrastructure to push, I think probably Shanghai to rival New York, because as it is, the Shanghai's futures exchange is fast becoming a benchmark. Okay, for example, oil traded in renminbi or renminbi to gold conversion, okay, and futures market for important minerals, okay, as well as grains. So emphasis on preventing and resolving financial risk, focusing on high-level opening up of finance and comprehensive financial regulation. So China will actually open up its financial center, but it will be backed by financial regulation. Okay. And one of the key things is that right now, foreign companies that go into China, they can easily be 100% foreign owned. They need to find a Chinese partner. Now, what
Yeah.
could happen in yeah.
Okay, yeah. By looking at those policies that China is having, actually, they also know about period nine. Definitely, the government already knew about it because people will be reckless. They know that people will be after the quick profit. That's why they are making all these policies to sort of, calm down the effect of the period nine.
Yeah, I think they are aware because I think the tradition of referring to metaphysics hasn't changed. It's just that they don't publicize it.
Yeah, that's right. The
No.
backbone of it, I think they make the policy also based on this consideration as well. Because
Yes.
Chinese metaphysics originated from China, ma. They even have higher or better professors that are in Beijing University that is researching on all these things.
Yes, I think that is precisely why also they pricked the property bubble in 2021. Because
Mm,
if they do not burst that bubble, by right now, the real estate would be in a frenzy. And when period nine comes, a lot of wealth is going to be wiped out. So
mm,
interestingly, China, whenever they want to do certain things, yeah, uh, they will do it in small scale and then they see how is it and then they expand upon the idea. But on and off, there will be one silly official who will make certain comments, yeah, like the recent comment that they want to reevaluate, okay, gaming, uh, and all those, and cause all the tech stocks in China
yeah, the
to collapse,
10 cent. Yeah.
yeah, by 10 to 20%. So that
Mm,
official has been removed. I think I
I
read
believe
that.
so. Yeah.
Yeah. So, it's such a big country, and sometimes certain people would want to outshine, okay, and that could be very damaging as well, okay, because some people wants to impress, okay, just like during the now, why corruption in China was the worst during the 1990s to 2010 was because a lot of governors, provincial governors, actually use the funds to just continue to build up the real estate. Okay, because real estate delivers the highest GDP growth,
Mm,
and because they want to succeed, in moving up the ranks in the political
yeah.
ladder.
Because KPI,
So
one of the KPI is property, ma. Property
yes.
prices. Yes.
Yes, GDP and all those.
Yeah,
So they
that's
were
right.
all doing that until she came in, and then they start to look into corruption. And that is when we see corruption extending not only in government, but also in the military as well. You know, so that is why there was a lot of revamp. Okay,
Mm,
so you can see by the policies just now is everything like against uh, being reckless, within the limitations of the law, okay, strong adherence, these are very, very um, strong policies, okay. So they want foreigners to enjoy the the development of the market, but then they also put certain confines because like in the US it is the corporations that run the government, okay, because it depends on how much money they donate to the
government.
politicians
Yeah.
who run for government, and then you know in Congress everyone goes in poor and come out a millionaire. Okay,
Mm,
so China's high tech and heavy industries will continue to thrive, especially in EVs, batteries, and shipbuilding. Now, Chinese EV companies are establishing new plants in Europe, Asia, and Latin America. So previously, during the earlier of the 5 decades of China's evolution, the first 3 decades of automakers investing in China. Okay, but in the last decade, right now, okay, China has been investing in other countries, okay, with their own auto plants. So China could emerge as the winner from the Middle East crisis and land freight volume swell. Okay, I believe the word is S. Land freight volume swell, and Chinese ships get a free pass in the Red Sea. Now you can see how important that BRI is right now, because the transport of trains through Xinjiang all the way to Europe has actually multiplied a few folds. Okay, and that is how the BRI now sees its importance. So the real estate market will need time to respond to the new policy and stimulus. Basically, I don't think the government is very interested in building out the real estate. They will let some of the corporations just default and so forth, because not many of the not many of the bondholders of those real estate companies are actually Chinese fund managers, but rather a lot of them are from Wall Street. So that's why I think they have already warned the developers not to speculate, but they continue to do so. China will not going to help them, but rather you can see that China is diverting a lot of money into high-tech manufacturing. Now, the opening up of the financial market could see more foreign participation in the sector. Now, this is a very interesting post from someone I follow in Twitter. Uh, he's called Bai, his short name. Now, he is a CEO in the of investment in precious metals. Yeah. So he wrote this: China imported 939 tons of gold, of which 144 tons were imported from concentrate sand. Total consumption of 1,089 tons plus BPOC increase of 224 tons equal to 1,314 tons. And less locally produced 375 tons equal to 939 tons. So here he is telling you, dropping some important hints. Now, 144 tons were imported concentrate sand, not gold bars, yeah, but sand. Now you can see that why recently there has been a huge difference in pricing between gold that is sold in China versus gold that is sold to the futures contract. Okay, now in Shanghai, the gold is valued at $276 per ounce, but in the COMEX right now it's about 218. So there is a premium that Shanghai will pay for gold. And I think one of the strategy is that because of the high premium, they will buy from the miners themselves, like concentrate sand or doré bars, which means unrefined gold, so that China is not going to wait for Switzerland to refine the 1 kilo bar and all those. So they are scouring and buying the gold from the miners, okay, in their raw form, so that it is refined in China. So I think that pricing premium has given China the advantage, because the miners will be very eagerly to sell, because I get a better price versus if using the COMEX future where I hedge. Okay, but right now here's a buyer that offers me a better price. So that goes to show that China is amassing a lot of gold. Okay, and you have to ask yourself why China is amassing so much gold. Could it be because they want to make their currency stronger? So there are some things that you need to think about. And the other thing is that, surprisingly, young generation in China are also now buying gold as a hedge against economic uncertainty. So it's the whole nation right now is like in a gold buying frenzy. Okay, it's being sold in the online platforms and so forth. Okay, now geopolitics. NATO, especially the UK, is voicing the need to prevent Russia from winning the conflict in Ukraine. And China and UK even mentioned that the citizens need to prepare for conscription. Now, conscription means forced registration as an army personnel to be sent to war. Okay, so that could mean sending troops to the conflict area. NATO is planning a major exercise in May 2024 next to Russia border, okay? And Europe's economy has already broken, creating more tension amid internal strife won't prevent Russia from securing its objectives in Ukraine, because Russia right now is in control, okay? And they are not going to settle unless Ukraine surrender. There's not going to be any peace talk. Now, the Middle East will remain a powder keg as current narrative seems to pin Iran as the culprit. If you follow the narratives from the mainstream media, they will say that, it is not Hezbollah, but they always say Iran-backed Hezbollah. It's not going to say Hamas, but Iran-backed Hamas, okay? And Houthis will be Iran-backed Houthis. So it's like pointing towards Iran, Iran, Iran. So as I mentioned, the narrative would always want to put pressure on Iran, or even to effect a conflict with Iran, because once you have badmouth that country enough, the people then would readily support the US government to have a conflict with Iran. So these are always narrative driven, okay? And just as in South China Sea, it's always the same thing. Now, Kishore Marubani recently has a very short video, okay? And if you have watched that video, he really explained why China was actually militarizing the South China Sea. I think it's on YouTube or in Twitter. If you have a Twitter account, just type in, Kishore Marubani, or you go to his Twitter. There is a video which actually he says that China wasn't the first one who militarized the South China Sea. It did so because other countries were militarizing it, okay? And and part of during a meeting between Xi and President Obama, China says that they are willing to demilitarize the South China Sea if the US also demilitarize the South China Sea as well. Okay, but the US did not want to. So therefore, the status quo remains. So I urge you all to actually go and watch the video by Kishore Marubani. And Kishore Marubani is one of the most respected, previously was a diplomat, but you can say that a thoughtful philosopher and geopolitical analyst, I think, are in this generation. Yeah. So US and UK warships have failed to provide safety net, okay, as insurance firms refuse to insure vessels transiting through the Red Sea. So bombing Yemen has failed to deter the Houthis, and just yesterday, a British tanker was being hit. So these are the developments that you need to watch out for, and it will be very volatile to the price of commodities, especially oil, because it's related to the shipping, especially in freight. Containerized rate has already risen, okay? And shipping for, if you look at the Baltic Dirty Tanker Index. Now, why is it called Dirty Tanker Index? Because it's used to ship oil as well as gas. Now, that index is also moving up. So naturally, if you know what this represents, you will also know what companies that you can actually look at. So for those members who actually did invest in a particular Chinese oil company early of last year, you should be quite happy right now, okay? Because the stock has gone from $10 plus, right now is $14, and they have paid a very good dividend since, okay? So NATO intends to expand to the east. Now, this will actually, I don't think there's going to be any conflict, but it will just widen the gap, and there's going to be friction between Europe and China. Now, although geopolitical tensions might arise in the South China Sea, there's no immediate threat of military conflict unless there is a false flag. So, Evelyn, back to you.
We are open for membership for this year still and 2024. So this you can unlock the global trends and the stock market insights and the market insights through the astrology and our global trend research. And I think just now for those that are new to this platform, you have gained a lot of insights right into the future to make an informed investment decision. And you can access this talk exclusively every month where we combine both astrology and research data together, that is tailored for investors, traders to provide an actionable information. Okay, so our memberships includes access to 2024 annual talks, the one that we will be having next week on the whole year, what is going on, the energy for the year is valued at 50 ringgit, a complimentary ebook on global trends. We managed to secure some copy from our publisher in an EPUB format for a few copies, and then we will sell directly to whoever that join our membership at 40 ringgit. Okay, earlier on, early birds members they actually get it directly from the public, from the publisher, and also early access to this monthly talk. That means February one you will get it like end of January rather than to wait. This talks is actually also posted in YouTube video for the public. If this in the public section, the talk that is published to the YouTube video, there will be it will be edited, okay, and also it will be 2 weeks later, which is already in the month of February. So that's why time is money, right? So you get it early and you will get the slides together in the private Telegram channel, and you can have access discussions and insights about us, about what is in this one. Sometimes we also give, although we say that we don't give stock tips, but sometimes we also give a little bit. Like last year also, we hope that our last year's member has taken action. And also a monthly date to enhance. Besides that, because investment is about intuition also. Yeah, timing, when you can see the time. So we also have monthly date to enhance the investment intuition. Last month I will give the one on February tomorrow to our members in the Telegram channel. So all this you will get it for 188. But I have to start from February to December 2024 because due to the admin work that I cannot have the 12 months. That's why we give it at the discount of 188 ringgit for those who are interested. Okay? So you can actually enroll. This is what our past track record, our past years. We have also accurately forecast the gold trend down in October, and which happened. And I think I saw some members to take action at the point of the time to buy in gold as well. Okay, and we also forecasted uranium price will go up. And now you can see that this is actually from last year to this year has gone up so much. It's almost
Some of
exponential.
some
Go
of
ahead.
you have bought the uranium ETF, yeah. Hopefully you all have seen some substantial gain. But
Mm,
for those who bought into the uranium stocks, I believe you'll be smiling very, very widely now.
yeah,
Okay.
that's right.
Um, yeah.
Yeah, that's so the 188 per year is already you already make back your investment by don't know how many times. We also talk about Xiaomi EV growth which is true that we have predicted that as well. Okay, so these are all the things, and these are what our member says about us, that we combine both unique methodologies as to help our members in their investment. Okay, and okay, so this is where you can sign up for the membership forms. I think PC, you can drop the form in the membership in the chat so that our
Yeah, I already
yeah
dropped it.
our
The
participants
third
can
one.
check it out. Yeah, that's right.
Yeah.
And also the sample chapter of the book that you can also look at it, that you will get it for free together with this membership as well. Okay. And also there will be an astrology and global trends annual talk, which expect we will do it on the 2nd of February. For this time, we will open for non-members. Okay. For non-members at 50 ringgit only. Okay. So you have an in-depth, I will do an in-depth studies on the Li Chun chart, the Bazi chart. I think some of the questions that Augustine's asked, it will be also been answered there as well. And then
Yeah.
achievement chart on 2024. What are the potential profitable investment using Chinese astrology research and how to install the investor intuition in you? That is most important because the timing in investing is very, very important. Even you know what sector to go in, sometimes the timing is not there, right? So sometimes you have to tap on the energy from the universe in order to enhance the frequency of intuition. Sometimes I make investment also is based on a little bit based on intuition. Besides the okay, is 80% research, 20% intuition. For example, like suddenly last year, there was a time that I want to go and buy oil and gas. And suddenly there was a time that I want to go and buy uranium stocks. This is how I do that in I sort of install the investor the intuition in me. Okay. So we will also sort of, look into the analysis of whether there will be a market crash in 2024 or not. So and then PC will give you an update of 2024 global research. What will it be like? If you also can, if you are unable to attend, we will share the recording with you because we will take attendance if you buy the talk. Okay. Then for those, actually, this talk will also be available in terms in recording. After this is an early talk that in February. Later on, after 2 months later, maybe in April or May, we will release it to the YouTube channel. But you have to wait until almost half year is already over. So 50 ringgit, you will get the access to this talk early as well.
Yeah.
Yeah,
For members, of course, if you join the membership, then
it's free.
yeah, it's all included. Yeah.
Mm, yeah, it's already included in the members package. Okay.
That is also why we encourage some of the members to go in as early birds, yeah, because if they have gone in much earlier, of course, the membership have some discount.
Yeah. And also we will give some discount to our existing member also.
Yeah.
Yeah. Okay. And actually the form is here. You can choose either option one, membership, or option two, just the talk itself. The link you can pay through there as well. Okay. And then this is just for those that are interested in annual analysis on 2024, you can also do so as well. It's a special price at 199 because actually an hours this plus almost 40 minutes of online or 2 hours online to talk about the report. I think some of the members and some of the people here also has already got this analysis from me. And it is a very comprehensive analysis, not just on the surface. That on the year, what do you expect on the month? What is your planning? How to tap on the energy and the forecast of the month? That what will the month be for you, so that you will be prepared for the month. Because in period 9, actually, if you have a foresight into what will happen, you will have a very big advantage. Okay. So this is the form that you're interested, you can register. Okay. So that's all for me. Then PC will go into the summary, then we will answer some of the Q&A that we have from our members, also from our audience here. So the summary from me is that look out for the gold price itself. And then definitely this month we talk about, back to fundamentals. So back to fundamentals, it will be commodity focus. Okay. In this sense, I think PC has already talked about it, why commodity has become so important. And then the stock market sentiment signal is actually still quite strong in a way. Okay.
Yeah, I think the signal will still be there, but closer to March, there'll be some people who would prefer to take profit. So watch that kind of technicals if you are a trader. Yeah.
Mm.
So market may still inch higher, but closer to March could see some doubt due to the looming expiration of the BTFP. Now the BTFP is confirmed. Yeah, the Fed few days ago say that that it will expire as scheduled. Okay, so it's already in the news. So US debt will continue to rise, and this could spark uneasiness in the US dollar. The dollarization will continue, and China's gold demand will continue to rise. Now, gold prices going up could be quite true because now for those of you who buy gold, I would recommend that you at least go to the CME COT, which is the CME is the CME group, and the COT is the Commitment of Traders report. So inside the gold table, you will see that um, there will be the amount of net short, net long, between different parties like bullion banks, the swap dealers, or the hedge funds, which are the managed funds and the producers. So it will give you some idea of the direction. Now, for example, if let's say the managed money is very net long, then you can at least anticipate that the bullion banks will be net short because they always run contradictorily against each other. Okay, so for example, if currently the hedge funds or the managed money, they have actually reduced their net long position in silver to net short, then you can at least anticipate that the bullion banks will go into net long to squeeze the managed money who are net short. So that's how the bullion banks make money. So it takes some time for you to notice that trend. But generally speaking, this month itself, okay, the amount of physical gold at the COMEX have dropped to 55.4% uh, uh, since the silver squeeze in 2021. Okay, whereas silver is now, the stock is down 30.9% since 2021. So we use 2021 as February 2021 as a gauge because previously the bullion banks at the COMEX, many of them can get away without delivering physical. But because of the silver squeeze, where the LBMA cannot deliver, so the COMEX have to deliver. And that was when they break their covenant that they will try to settle everything in cash. So eventually, once they have delivered physical, it becomes open, the floodgate has opened. So that's why, people on and off, some companies, they see an opportune time, gold has fallen in price, then they buy a huge contract and then says that I want delivery within, because there's delivery period over the whole month. So if they buy towards end of the month to deliver next month, then the bullion banks really have to search for the gold to deliver. So it has become a game of chicken, yeah, between the buyers, mostly are from the east, central banks who are buying up the physical gold, because Singapore also increased their physical gold by a few hundred tons, Thailand as well. So these are already telling you something is destined to change, okay, in the financial market in the not too soon future. Then, of course, because US continue its debt, okay, and US need to refinance $8 trillion in debt this year. So this will further weaken the US dollar. And if let's say US continue to issue debt, but there's no buyer because people want to de-dollarize, people do not want to hold US treasuries, then there will be a buyer of last resort. Eventually, it will be the Fed. Now, recently, the Fed has uh, recently the Fed has actually unwinded huge chunk of its assets, okay, uh, a lot, okay. that seems to suggest that um, they may want to quickly wind down their total assets because there could be a possibility of another QE coming up. So instead of QE plus QE, right now we have QT and then you add back QE. So then it doesn't look too bad. Okay. Now, US local governments are stamping their independence, and this would go to more disarray among the US citizenry. Okay, there will be a lot of friction between parties. There'll be a lot of frictions between people from different political divides, and that would, to a certain extent, okay, uh, deteriorate the unity among citizens of the country themselves. So Europe will see mass demonstration against government policies, and this will continue to be the focal point. Okay, and the war in Ukraine and Middle East crisis will continue to deteriorate, um, uh, because I see that even among geopolitical analysts elsewhere, they seem to agree that somehow it's all targeted towards Iran. So that is the danger, okay? Because Iran is not a pushover. But like I say in my previous session with y'all, Iran is an important land bridge that connect the oil in Middle East to China. And Iran is an important land bridge that connect the oil from the Middle East to north of Russia via Central Asia. So that is why Russia is very strong. Russia is very strong militarily because right now is, by itself is like giving NATO a lot of headache. China is very strong economically, okay, but militarily, China has not been tested, although their upgrade of military assets have actually improved by leaps and bounds. So Iran could be the convenient target, okay, to destroy its economy and then destroy the land bridge. Then of course the BRI and the INTSC, okay,
Okay, I would like to say that,
yeah,
China, although their military has not been tested, remember that Sun Tzu art of war comes from
yeah,
China. So,
yeah,
so it will really surprise everyone if you decided to test China of
yeah.
those war strategy and everything.
Yeah, and China will always believe that, will always want to win without starting a war because
Mm,
that is the least expensive venture.
yeah,
Okay.
it's also
Um,
in stated in Sun Tzu art of war as well.
yeah, so the only time because I also read part of the Art of War,
Mm,
and the only time that uh it becomes a battle to the end is what they call a battle on dead ground, okay, which there is no way out except to fight it through. And
mm,
that is when the strength of military economy and also intelligence become very pivotal, okay, in determining the outcome.
mm,
So, but I think China will always want to do business rather than seek war. And
mm,
that is why I don't think they will ever attack Taiwan, although it is a dream, okay, for the US that China start something first. So China is not going to start anything, okay, but they will just pile on economic pressure. Um, and this will continue to frustrate the US because the US is racing against time because they need to rebalance everything. And part of it is to force China to commit something, sanction China, terribly seize the assets like they're going to seize China, okay? And then uh, that itself, okay, can help US recover, okay? And China has trillions of dollars of assets, okay? But then you also see that China is gradually, like recently, China is, in defending the stock market, China is requesting the SOE to repatriate their funds, okay, to help the stock market. So obviously, I think it is a hidden thing that this the right time not right now, okay, to move their funds out and from overseas, okay, back to the country. And another thing is that China previously at the London Bullion Market Association, LBMA, China used to have three presiding members there that set the price of gold. So, which is the three major banks, yeah. But since the last few months, these three banks have been inactive at the LBMA. So that means that they are no longer helping to set the price. But at the Shanghai Gold Exchange, Chinese banks have been very active. So that goes to tell you that China is moving, especially Shanghai, because they learn everything about, London is a financial market. They've been there for many years. So they learn everything that they can. And right now, they are no longer active there, but they are very active in Shanghai. Now, this also suggests that China is going to build up Shanghai as the financial
Financial
center.
center. Yeah.
Yeah. So that's how the way is going to be. Okay. So that's why I think South China Sea will see elevated tension, but there'll be some complain, then then after that everything will come back down. Uh, unless there is an intention to create a false flag and then to blame it that China started it, okay? Much like what happened during the Vietnam War, okay? During the Vietnam War was premeditated with the Gulf of Tonkin attack, but the Gulf of Tonkin incident, US ships were not attacked. The US ships were directed just to shoot. And then they say that they were being attacked, and in response, they are going to the US will get involved in the war. So there could be this kind of false flag and just to start a conflict. But right now, I think a lot of governments are very smart. Like Iran, they have a drone flying all over the conflict area so that there are footage to be seen. And even the the tension between Philippines and China, both sides also have drones to show what's happening. So I think drone has become a very important asset,
Mm.
okay,
In
to the
military.
military.
Yeah.
Yeah. Okay, so that's all. Let's answer some of the questions.
Okay. Yeah. Augustine has a questions. Has Fed actually announced that they will stop the BTFP?
Yes, they have. As I
Mm.
mentioned just now, you can search back the news just a few days ago.